Hey everyone, welcome back to Corporate Decoder, the place where we try to decode corporate filings and hopefully make them less boring than reading the ingredients list on a loaf of bread. Today we're diving into Rithm Capital's latest report, and let me tell you, there are a few surprises in here that might make you rethink your next investment. In a nutshell, Rithm Capital just released their financial results, and we're going to break down what those numbers really mean. Think of it as turning financial jargon into plain English. We'll explore what's driving their profits, what could be hiding in the fine print, and whether or not it's all sunshine and roses. So the report is dated April 25. This is called a current report, or an 8K, and it's something companies file to tell investors about big news. This one is about their financial results for the first 3 months of 2025, also known as the fiscal quarter ended March 31, 2025. The main focus here is item 202, which is all about the company's performance and financial health. This is where they share details about how much money they made, what their expenses were, and other important financial information. They put out a press release about it, which is attached as Exhibit 99-1. That press release is a summary of the results, and we'll be digging into those numbers. First, a little background. Rithm Capital is a company whose stock is traded on the New York Stock Exchange under the ticker symbol Rithm. They also have several series of preferred stock traded under different symbols like HMPRA and Rithm. This is important because it tells us where investors can buy and sell shares of the company. Now, the important part, the company issued a press release dated April 25, 2025 about their results, and this is the core of the report. So let's get to the numbers. Since the actual financial tables are not included in this report, we need to imagine what they might contain based on the company's business. Let's assume this press release talks about key metrics like net income or loss, revenue, earnings per share, and maybe some details about their investment portfolio. Let's further imagine we see that Rithm Capital's net income decreased by 15% compared to the same quarter last year. That means they made less money. Why might that be? Did their investments perform poorly? Did they have higher expenses? This is the kind of question investors would want to answer. Let's also pretend their revenue increased by 5%. That's good news, meaning they brought in more money. But if their expenses increased by 20%, for example, this could explain why the net income decreased. Imagine they also reported earnings per share, or EPS, which is how much profit each share of stock earned. If EPS decreased even slightly, that could worry investors. It might suggest the company is becoming less efficient at making money. Since Rithm Capital likely deals with investments, the report could contain information about the performance of their investment portfolio. For example, if they hold a lot of mortgage-backed securities, like it can be guessed by the name of the company, the report might say how those investments performed. If interest rates went up, the value of those securities might have gone down, which could affect the company's overall profitability. Exhibit 99.1 is mentioned again. It is the actual press release. Basically, the filing confirms that Rithm Capital made an announcement about their financials. Now, let's zoom out and discuss what this all could mean for Rithm Capital and its investors. If their net income is down, it means less profit is available to reinvest in the company or pay out as dividends. This could affect the stock price if investors become less optimistic about the company's future. If the increase in revenues is slower than the increase in expenses, it's a bad sign. The company must become more efficient at managing its costs. If their investments didn't perform well, it could be due to a change in the market. This could influence their strategy in future. Now, this is all theoretical because we don't have the real numbers, but the overall point is that analyzing financial results is like detective work. You need to look at the numbers and try to figure out the story behind them. Finally, the report is signed by Nicolas Santoro Jr., who is the Chief Financial Officer and Chief Accounting Officer. This is just a formality to show that the company is responsible for the information in the report. And now let's step back and consider the bigger picture. Based on this filing, Rithm Capital might be facing some challenges. A drop in net income is never good news, and it's something investors will want to keep an eye on. However, a slight increase in revenues is encouraging, but it needs to be balanced with controlling costs. One potential risk could be interest rate changes. If interest rates continue to rise, it could negatively impact their mortgage-backed securities portfolio. On the other hand, there could be opportunities for the company to invest in new assets at higher yields. In conclusion, this report suggests that Rithm Capital might be at a crossroads. They need to focus on improving their profitability, managing their expenses, and making smart investment decisions to keep investors happy. Thanks for watching. If you found this helpful, please hit that like button, leave a comment, and subscribe for more corporate deep dives.